Welcome to the end of day review for Monday, the 18th of December 2023. As usual, kicking off with the economic calendar, you can see there was no high impact news releases for the day, and thus there was no news bearing impact on our trading. Jumping into the charts, essentially starting on the daily, what we can see is that Friday was a bearish day, and the wick of Friday was lower than Thursday, essentially validating the swing high point and invalidating any ERL continuation momentum based trades. We are now officially in the pro trend leg. Given this fact, we have to essentially, to trade long, we need 4H backing from the pro trend leg in order to support 15-minute or 5-minute generation of a primary leg. If we don't have this, we have to be patient and wait for a new primary leg on the 4H to develop to revalidate longs until so I guess until the pullback phase chalk is actually broken, there's no reason to short. So perhaps to elaborate more on that, jumping onto the 4-hour, essentially what you can see is I've used the supply demand buy to sell wick flip that we have right here to justify why price may continue going long from here. However, buy to sell wicks are generally not high probability, and as you can see, as the day progressed, we actually came lower and effectively broke that level. I did manage to catch a long in here, which was a loss, and that's simply part of the probabilities. I did understand that whilst this is a valid level, it may not hold. In terms of what I was saying earlier, why shorts don't make sense is because there is no valid strong OB failure to support that the pullback phase is at play. As a result of this fact, we don't really have any option to short. Our only option is to consider this substructure, wait for this 4H OB, which is considered a CPB, to actually body break and then revalidate a primary leg to enable longs, or alternatively we come into the pro trend extreme and then validate longs to continue higher and target this ERL. Moving on to the 15-minute, what we can see here is we did have the change of character as a result of the interaction with this 4H buy to sell wicks, which then validated this primary leg. As usual, we waited for one side of the Asia range to be swept prior to getting into any entries. Our fib level is aligned to this pre-Asia low of the day and anchored to the extreme. We then entered at this 38.2 fib level, given that there is liquidity in the leg to support actually longing from this. So there wasn't actually any way or any information to suggest that shorts is actually going to take over, and as a result this loss remains valid. That was my London trade. Then essentially moving on to New York. In New York, we were still within this buy to sell wicks on the 4-hour, and we were able to potentially revalidate another long opportunity. However, in this instance, because the London low of the day was put in the lull, we essentially had to also consider the fact that any POIs that would be created would be as a result of the lull, and thus we would need to wait for New York open. New York's open implications is the fact that we need to consider previous session range liquidity. In this case, it would be London range liquidity. As you can see, with regards to the London range, we haven't actually wicked any side of it, right? So if you look at it, maybe not. Let me redact that statement and rather say we've wicked the bottom of the range. Essentially what this means is that we created a New York low of the day, which has invalidated our long ideas, because a New York low of the day would require a significant red folder news event to support why there is a New York low of the day, as generally New York low of the days are quite rare. Essentially what we had to do at this point is take it that we actually didn't get the daily direction correct for Monday, and as a result of this There was one loss and no other opportunities to consider longs. Like I said, shorts were completely off the cards, and then this is essentially today, and you can watch my New York outlook if you want to have a look at that. But I will do another end of day review for Tuesday, the 19th of December 2023.